I always do my analysis on, NAS 100 because that's what I've always done it on. But I'm not sure if I want to do my analysis on Qs here or if I want to do my analysis on NASDAQ. They're the same thing, but the QQQ is what I trade because I have to trade ETFs. I can't trade CFDs. Regardless, let's go over kind of where we're at and I'll show you guys my trade, which I'm just ecstatic. I was so excited about this last night that I couldn't sleep. I was so excited to be able to just look at my trades directly on TradingView. You guys have no idea how long I've been waiting for this with Webull. So this was just a dream come true. Christmas came early for me. That's for sure. To be able to see the trades directly on TradingView is just so exciting. Anyways, we've got a lot to do. I missed the news. We fixed our internet here fingers crossed, knock on wood. We've been having some internet issues with the router that we currently are, or it's the modem that we have, has some tendencies to kind of like blow up, like overheat and then go down for like 10 minutes. And it's very, very annoying. So we got a new router. I was installing that. So I was a little bit late to the mix today. So without further ado there, I want to talk about retail sales numbers. Retail sales came out much hotter than expected. And this to me shows a strong consumer. I know, of course, the initial reaction to this is, oh, the Fed is going to have to raise rates. They're going to keep rates higher for longer. They got to crush this economy, yada, yada, yada. Yes, true. But retail sales being strong is not necessarily terrible for retail facing companies, right? So if you're thinking stocks for a second, the S&P 500, sure, it's trading a little bit lower off of possibly what fears could be around the Federal Reserve. But I don't think it really drastically changes my outlook. I'm still bullish indices. And in a few minutes, we're going to bring in my fellow bull. I think he's still bullish. We'll see. We'll ask Ivan just a few moments about that. But we're going to talk about, of course, the indices and whether or not they are, set to rally higher from here. Again, I have a NASDAQ position. I'm finally able to show it. And oh my gosh, I'm so excited to be able to do that. From a content creator standpoint, it is so much more convenient to try and just, show trades on another window, pull it up, reference it. It's just confusing. So
did you know our market scanning software, the EDGEFINDER, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The EDGEFINDER not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the EDGEFINDER at a discounted price when they use promo code A1YT. You can check out the EDGEFINDER with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
Anyways, NASDAQ still long. I've got my stop loss below lows. If price breaks underneath this low, that's going to be my trigger to get out of the NASDAQ. You might say, well, Nick, is this a lower high kind of concept? Is the NASDAQ set to fall apart from here? I mean, maybe, but we've had decent earnings so far. The banks yesterday were good. I haven't looked very closely at earnings this morning. That might be also why we're seeing a little bit of decline early session. We saw a spike and then following retail sales numbers, again, which came out at 8:30. So that's kind of this candle here. We're seeing a little bit of give back, but we will see how this one wants to play out. Another market that's kind of interesting to talk about right now is, of course, gold, which stays strong, elevated on kind of global fears right now. Gold has been an area where I've had a lot of conversations with a lot of people, a lot of questions about gold right now. People are wondering, is it set to go higher? Is it set to break out? And while I think that there's right now a short-term catalyst that all of us are aware of, right? The crisis in Israel and Palestine, right? You have the conflict going on there, and anytime you get global geopolitical fears like that, it usually causes gold to spike, and when it's wartime, it also generally causes oil to spike. So we've seen oil catch a little bit of a bottom, breaking out here to the upside. I think that oil I'd be more bullish on personally than gold. The VIX is up here this morning. That's going to be usually a positive factor to gold as well. And if you're watching this again, I think for bulls, here's what I'm going to say. If you're a gold bull, you got to break through this level, right? What's the holdup here? If we're going to see bullish expansion for gold, we got to break out of key resistance at 1940. If you're a bear, watch this level, because if this level rejects, I think we may be headed lower. And you guys know where I'm at. I lean more on the bearish camp, but I have no shorts on gold. I'm not betting against gold right now. Price action looks too strong for me at this point, and I'm waiting for signs of rejection before potentially getting bearish. The VIX, for those of you guys who don't have it on your charts, it can be a really useful indicator. The VIX is it's an instrument that basically calculates volatility based on the options world in the the options market. The options market is full of people who are betting for or against volatility. And so when we see elevated volatility, to Ivan's point about gold making a move higher off of a geopolitical tension, if it's left to be without any escalation, gold is going to probably drift back down. Same thing with the VIX. If something scary happens, but then things don't stay scary, or they don't get scarier specifically, the VIX kind of falls apart. Same thing with gold. So right now, I think gold is somewhat acting in tandem with the VIX. There's probably some correlation going on right now where a spike in the VIX due to global fear, bond auctions going poorly, that sort of thing is causing a drive for the gold market. You need another catalyst here. And I think the only way you get through 1840 after making this run up, if you're a bull, if you caught that, like you said, off the webinars you guys talked about, if it breaks out kind of thing, there might have been a trade in there. But at this point, you have to ask yourself, what are you betting on? Are you betting on things that are going to drastically escalate because they're already expected to be heated and a very unfortunate, terrifying crisis that's going on right now? You almost have to have more of that sort of thing to price gold higher if you're going purely off of geopolitics. And if you're not going off geopolitics, if you revert back to the Fed, well, the dollar's hot today and it's been strong. So gold clearly is trading currently off of geopolitical tensions. If it was just following the dollar, it would be down today. It's not just following that. It's trading somewhat closer to the VIX, which is a really interesting kind of scenario. I guess, Ivan, that's like an impossible thing to predict, is what's going to happen next over there. Of course, we hope that de-escalation is what happens. That would be obviously the peaceful resolutions would be ideal, but who knows? And it's a really hard one to watch. Let's talk about the dollar though, specifically for a second. We have a Fed meeting coming up next month. We have really still strong economic numbers. We had jobs that were hot, PPI and CPI all strong. Ivan, are you a dollar bull or are you dollar bear?
Well, I'm a dollar bull, and there was something that came to mind yesterday, and I think it was Fed Harker said that they were going to still keeping interest rate for the end of the year, which is kind of like, well, we will see. We're not going to go the same mistake that we did with Bank of Japan, Bank of England a couple of years ago, where one member said, well, we are going to increase, and then it never happened because he was the only one that felt it. I would just want to mention who mentioned it. Was it Juba says, what about USD yen? I just want to make sure that we all see that. And apparently, it was because Bank of Japan came out earlier this morning or whatever, says that in financial year, they are discussing to increase the 10-year T-notes, I think it is, to 2%. Now it's maxed at 1, and that is the reason for why we are seeing the sudden drop, which was a bit crazy. I watched it and I saw the account going down and back up again, and then now we are almost making new higher highs. So yeah, it's a very volatile morning, I would argue.
So Ivan, do you have any yen positions right now? Do you have Aussie yen or Kiwi yen, dollar yen? Do you have any trades open on yen crosses? Which ones?
Well, I have, where are we? Aussie yen there. I still have this one. I still have this CAD yen thing from down here, and this euro yen from over here. So I've been holding ever since Jesus was born. But yeah, I try to hold them. Secondly or thirdly, I I don't like this volatility. $100 down on the USD yen is kind of like not what I want to see, but on the other side, I see we are coming back up to 150. Sorry, that was a bit high.
Gotcha. Yeah. No, I think it's interesting just keeping an eye on yen crosses with such a volatile. It's so interesting to me how almost every time there's a ginormous spike to the downside like that, buyers rush in to very quickly fill that void, almost betting against the Bank of Japan each time. I don't know. What do you think causes that? What causes that rush into shorting the yen whenever it spikes like that?
Well, because the fundamentals are, well, they're still buying their bonds, which eventually makes their currency weaken, and they keep doing that in limited amount of money. Until they stop doing that, we're going to continue seeing yen weakening. As much as they intervene, as much as they're going to increase their yield curve control, they're still buying bonds, which ultimately make their currency lower. So as this is just a buying opportunity, even though it happened in split seconds.
Yep, that's fair. And also a good question in the audience. Somebody said, why so many correlated pairs? But I'm gonna offer my insight, and Ivan, you can possibly add to it as well. Maybe the idea is that instead of just taking yen against one specific thing, Ivan is kind of doing a little bit of a basket, right? Where he's trading several currencies against the yen. Just in case, if he's only long Aussie yen and then Australia has something crazy happen, there's less diversification than if you take smaller bits on several different currencies. That's my guess. Ivan, am I right or am I wrong?
Yeah, like I don't see the problem. I honestly don't. Because what does it come down to? What you guys are worried about risk, right? You guys are worried about what about if Bank Japan comes in and everything goes down? Then everything goes down. The thing is what I'm doing currently is seasonality on the yen. I can't trade euro dollar and think, oh, that's going to go higher because the yen is going to weaken, or fundamentally, it's because yen is fundamentally weak. Therefore, I can only trade yen pairs. Now, each country that I'm trading against has different CPI, has different developments. And also technically, there are different stages. If you saw New Zealand yen this morning, it dipped because the CPI came out lower than expected. Well, can I buy New Zealand yen? No, I can't. But I can buy USD yen.
Right.
I will still make money. So I was just trying to find which of the yen pairs are still going higher. Is it a risk issue? Yes. Am I exposed? Yes. But I've been doing this for 10 years.
Yeah, right. And there's any person commenting on a position that someone takes, you can always find the whole or something that could counter their position. There is never a 100% certainty in the markets where, you don't ever get any reward in the market without taking some kind of risk. And of course, I'm not saying you should just go all in on a position. I'm saying that there's always a reason to not take a trade, and to take a trade, you have to look at your system, evaluate the risk to reward, and see, is it worth it, right? Because this is a game of probabilities. It's a game of uncertainties, and weighing probabilities is all you can do. You can't know for certain what's going to happen. Just a little recap on what's kind of been moving since we've gotten on the air. Gold continues to stay strong, does not seem to want to break out here. For day traders, for people watching gold, I want to draw your attention to something. If you are a bull, I mentioned this, the next level, and Ivan added something nice to this. We talked about how if you're watching gold and you're looking for higher price movements, I'm not saying that it can't happen, but Ivan and I made the point that it's really important that you understand, in order for gold to take out the highs and make meaningful gains higher from here, unfortunately, the reality of the world right now is based on the way gold is trading. Escalation is what would probably cause that in terms of geopolitical tension, which of course none of us want. But in terms of purely what you're talking about, which would cause gold to spike higher, it would either be a rapid decline in the dollar due to possibly some economic figures, which we don't really have any major ones set to come out right now. Again, we had numbers this morning that were strong for the dollar. So regardless, you need some sort of escalation on the geopolitical frontier in order for this to move up, or dollar strength or de-escalation would probably cause a breakout the other way. So in terms of like fundamental analysis, or for fundamentalists in the room here, again, you need escalation for breakout higher, or you need de-escalation and bowing down to that dollar strength for gold to make a move lower. And either ways, again, those are both catalysts that you could potentially trade if you have a good risk reward. And as we just got done mentioning, if the probabilities, if the risk to reward profile makes sense to you. So yeah. Ivan, what else are you looking at? Are you looking at anything other than yen crosses and S&P right now?
No, I'm a bit worried about Dexter. I think that's what it's called. The thing is it comes down to a couple of things. What is your risk profile? Yes, mine is against yen, and then you say Bank Japan can interfere. But what about Fed? They also interfere. They also have changed their opinion a couple of times. And Swiss National Bank just peaked their interest rate. Bank of Canada tried to peak at least in their interest rates. That's risk you're supposed to take into consideration every time you trade. It doesn't matter if you look at your dollar. It doesn't matter if you look at whatever pair. We are in the currency market where interference, manipulation, whatever you call it, is a daily dose of our trade. And if you're saying, well, I would say, what about your dollar? What about dollar pairs? Can I trade it? And I'll be like, I don't see any trades here. This is range. This isn't high enough for me. I need minimally 106 or even high before I can start thinking about it, because it is so low that a change of trend is going to kill my trades. I see that as a higher risk to sell your dollar in the current market than to buy yen pairs.
Sure. Yeah. And that's the thing. You can always, as we were saying, you can poke holes on any chart, long or short, at any time. Like at any point, a good trader understands that there's a good argument for either side. And that's why, new traders, novice traders, losing traders, unfortunately, they have too much conviction in their trades. They think there's no possible way that they could possibly be wrong. And that's what gets you in a lot of trouble. That's where position sizing is so key. So yeah. For the Culture FX, what's up, man? I follow you on Instagram. Good to see you in the chat. Thanks for being here. 10-year yields exploding higher. Yeah, let's take a look at the yields, see what's going on with that. By the way, guys, I say this often. Wow, look at the yields, Ivan. That's up 4.819% on the day. Crazy. And again, this is a contributor to dollar strength. We've talked about the yield curve and also yield across the curve several times, but the 10-year up to 4.82%. What's scary about this is that this is a rapid acceleration to the upside in yields. And in some ways, by proxy, this is almost like another rate hike. And it's a little bit confusing at first to newer traders, but if you don't pay attention to the yield here, the 10-year, is what government bonds are offering on a 10-year offering. So if you give your money to the Treasury for 10 years, you're going to get 4.8% per year as a coupon during that period of time. As this goes higher, this is a threat in some ways to risk on assets, because people can park their money in this instead of taking risk. And that can be a downward pressure for, of course, my own NASDAQ trade, Ivan, the S&P trade. But it's one variable to look at. In some ways, you could also make the case that this is doing some of the work for the Fed, and they might be less inclined to rate hike since the yields are kind of doing some of the work for them. So it's a little tricky. But what do you think is driving this higher here today, Ivan?
Higher than expected higher than expected PPI, higher than expected retail sales, and still continuation higher on the CPI. All the inflation measures are still high or looking higher than previously projected.
And that's the thing. I think, Ivan, everybody looks at when they get into trading from a retail technical trader level. What most people do is they look purely at technical analysis and they look at trends in that nature. But what you and we try and do in these shows and these streams together is we try and look at fundamental trends as well. You just pointed out a really key one. The inflation trend, the interest rate trend is something that's been really strong. And if you've been paying attention to that, there's been plenty of kind of windows to take advantage of it. So yeah, very, very interesting to see. What do you got pulled up here? The FedWatch tool?
It's the FedWatch tool that is, as you can see here, the current, which means no rate hike both in November and in December, are the probability is now sinking down to 58%. It was yesterday 65, and one rate hike is now increasing from 32 to 38, while another one comes creeping in with 2 rate hikes by the end of the year is being priced in slightly. So yeah, Quebec says 50-50. Yeah, I think we're actually getting close to that. So the question is, what is going to lead to this? What is going to be the tipping of the weighing scale? Is going to be the next CPI coming out around 13th of November. It's going to be the tipping scale.
And I think I want to add something too to that concept. If that narrative continues to go, that right there, if you also get any sort of de-escalation, I've been trying to make this point on my videos, gold in that situation, in that environment, could really give back gains very quickly, for the reason that if you have elevated yields and then a Fed that stays hawkish, and then there's any de-escalation in the Middle East, of course, I'm not saying that would happen, and I do hope that it would be ideal for, again, humanitarian efforts. But if that does happen, you couple all those things together. Gold was super bearish before the geopolitical bump that we got. If that geopolitical bump is no longer there, gold could very easily take out the previous lows based on kind of the fundamentals that have transpired after this this window where we've had a bump. Again, there's also probably a good reason why, if this, even though this is a terrifying, horrible crisis that's going on, gold is still, it's not like it's above 2000. It's not like it's been explosively higher. The dollar is still incredibly strong. And so as you rise here, the further, I think there's a gravitational pull that the dollar has right now on gold. So that's why I'm generally pretty bearish on it until something changes with this dollar bullish thesis that we're discussing here, Ivan. That's, again, a lot of people are really super bullish on gold. I'm just trying to be cautionary with it.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.